look, oil fell something like 8% last week, despite the fact that we saw OPEC stepping in with this decision to extend output curbs. What has gone so wrong in this market over the last few weeks?
Well, actually nothing. The market has been in this range between, let's say, $70 and $90 for the last period of time. Yes, we are now at the lower end of the range, and you may say, well, that's contraindicator. You have seen bullish news actually out there with Libyan production gone, with consideration of now actually postponing the release of extra barrels, which would have been, the release of extra barrels is bearish by definition. Not doing that, you would assume this is positive, this is somehow, bullish. But again, the market didn't even pick up on it. And so clearly the answer is it has little to do with the oil market per se. We have seen this correction more related to the economic indicators. In the US, we know the market is right now quite nervous about the rate cuts that are coming up. So everyone is more fixed on the negative news of the economy and the anxieties. At the same time, those anxieties are getting stronger when you look on China. And China has been, by and large, the biggest driver of demand growth in oil. And we have not seen any positive news coming out of China, like your interview partner just before said as well. So what we can say is the market didn't see too much of a reflection of the positive news, but more of the negative news lately.
Indeed, and Saudi Arabia has also just cut crude prices to Asia. Do you see that as a sign of weak demand to come, particularly as investors assess the disinflation concerns now coming out of China?
Yes, I mean, the demand in China is what everyone is scratching his head right now. Nobody really knows what it is. It is supposed to be the overwhelming part of the oil demand growth is supposed to come out of China. And you know what? Right now, all the analysts are nervous because they can't read the data. They don't really know, is it really there? Is the demand growth there? So what do we see? We see that the exports of products are increasing. We've seen lately that the diesel market in Europe has been very weak. Normally at this time of the year, diesel is relatively strong with maintenance on the one side, harvesting season, refilling of the inventories before the winter. Normally that's the time when the cracks, the spread between gas oil and Brent is relatively strong. No, it has been weak. Why? Because a lot of barrels were coming out of China, and that at a time when actually the barrels out of Russia that normally supply Europe with gas oil are not there. Now, what does this tell you? It tells you on the one side there's more product coming out of China, which tells you something about Chinese demand. But at the same time, what it tells you is that we are over this anxiety factor that was driving the prices up above $70, up to $90 in the last 2 years. It's this warfare, the warfare that was there, when Russia is not there anymore. Is the oil market well supplied, or what's happening? And then came the warfare about the Near East. What happens when there is a confrontation, Israel-Iran? What happens when the Houthis are blocking the straits? Now, nothing of that materializes. So the conclusion is that all the anxiety factors that normally manage to keep the prices above this $70 level, they have shrunk. They are not there right now. Everyone says where they are, nothing really happens. And this is why right now the market is a little bit embarrassed. It's like economy outlook is not good. Anxiety fears are not coming. So maybe, there's no reason to go higher.